So what is that one Singapore stock that we could potentially see more upside as a play on the entire tourism sector? Because post-COVID, now people are starting to travel, the tourism industry is starting to pick up, hospitality industry is starting to pick up. And what is that stock that could actually benefit from it in Singapore? Hey guys, Joey here, top tier here, trader in Philips Securities, and in this video I'll be showing you just one stock that has came into my watch list over the past 1 to 2 weeks. Managed to see a little bit of a bullish price action coming back, and of course in terms of the fundamental it looks quite strong as well. Alright, so let's dive into this stock right now, and this stock is none other than Genting Singapore, right? Genting Singapore, I think some of you might have guessed it as well. So Genting Singapore is one of those stocks in the tourism sector in Singapore. It kind of like has Resort World Sentosa, and it kind of like reported really strong results just a few weeks back, 1 2 weeks back, whereby these results kind of surprised to the upside and kind of like showed strong revenue increase by 107% and 143% year on year in terms of revenue and EBITDA, all right, recoveries. All right, so yeah, kind of the strong quarters and one of the strong best quarters since COVID-19, with revenue and net profit actually coming or recovering to about 87% or 85% of the third quarter 2019 results before COVID. All right, so it's kind of like pushing up, results are strong, profits and revenue are kind of like slowly increasing back to pre-pandemic levels, right? And that's a good thing for Genting Singapore. And what happens is that with the world kind of like opening up, of course with China as well easing some of these COVID measures eventually, and people starting to travel, all that would point to a stronger recovery going into 2023 or maybe even to 2024. All right, and things that these foreign tourists, of course Singapore we do go to Resort World Sentosa and all that, but foreign tourists accounts for about 75 to 80%, right? 80% of the total attendance prior to the pandemic, right? So that's high, quite a high proportion of foreign tourists coming into Genting Singapore and spending, and even so in terms of the spending amount for each foreign tourist or visitors, that's a huge amount as well, and it can kind of give a quick significant boost to Genting's revenue going forward in 2023 and 2024 as the world continues to open up. Alright, so this is the fundamentals of the story behind Genting Singapore. So let's just dive into the charts for Genting Singapore to see what has happened, right? So this is the chart right here, and just about a week back, right? I've sent out a note to my clients as well. Right away here, you can see that we were pretty much consolidating for Genting Singapore in this range from about 70 cents to 85 cents, right? Since last year, May, for more than 1.5 years, I would say 70 cents to 85, went down, up, and just last week right here, we managed to break this resistance level at that 85 cents. We kind of like set an alert, it broke that 85 cents, it went to about 0.855, right, which is above 85, and that's where we sent out a note to clients whereby there could potentially be more upside right over here to the upwards target about maybe 90 cents to 95 cents if we can actually hold above this new 85 cents level, right? So this is kind of like a target that was drawn just last week before it actually started to play out, and it seems like we are starting to push a little bit higher, and let's see where we are right now. So this is Genting Singapore right now, trading at about 0.87, slightly higher compared to just last week. I've shown you the image just now, and today is the 23rd of November, so on 15th November, as I mentioned, I showed you the image. There were some upside targets that were drawn, all right, all the way to about 90 to 95 cents. All right, so let's see where we are right now. So we have kind of like push up slightly higher, and it's about 0.87 over past like 3-4 days. Managed to push up a little bit of profit taking, I would say somewhere around that 88 to 90 cents level. I think that is where some selling can come back. You can see right over here. So let me just draw it for you and kind of like analyze. You see that 90 cents would be a little bit of a temporary psychological resistance level, because we have come like touched here once somewhere last year and sold off, all right, and okay, let me just draw another line right here. You can see that this was originally the support level as well, somewhere in 2021. So it was kind of like a support level. We broke down, sold off, retested, came back down, and of course, this was a little bit of a resistance level. So yeah, I would say that 90 cents, a little bit of a psychological resistance level. If you can break that level, let me go ahead to draw and reiterate some upside targets again right now. All right, the fact that we have kind of broken this 85 cents level that I've mentioned last week, right? So 90 cents would become like the short-term target. If you can break that level, then potentially more upside all the way to the next high, all right? And that would be critical. That would be the 95 cents level, which is pretty much the high that we've seen somewhere in March 2021 last year. All right, so that is kind of like the targets for Genting Singapore. You can see that, as I mentioned, right, we have been consolidating, and as I said, this stock count came into my watch list over the past 1 to 2 weeks. I mean, even though the story or the fundamentals were looking good, but we wanted to see a little bit more good or bullish price actions before looking at it again. So there were some alerts that were set, if it does move or break above that 85 cents, we were alerted, and that's what happened. All right, but why? All right, because you can see that since last year, we have been consolidating. All right, maybe it's moving sideways in this range over here. In fact, we have covered this a few times in the video as well. All right, and that was pretty much the range. So if you want to like trade the range, moving up and down, you can see it's like moving up and down from that 70 cents, kind of like went up again, touch, came back down, touch, came back down, touch, came back down. It was just pretty much just moving up and down in what we call a consolidation. So you could actually have traded the range. I mean, just doing that 70 cents to 85 cents is what we call a 15 cents range. But what could actually see more upside? What could actually happen that we can see the uptrend kind of like continuing and taking shape rather than just moving sideways? This is what can happen if we can break that firm resistance level, that 85 cents that he has touched about 3 or 4 times and came back down. All right, but now he has managed to break above it, and of course staying above it as well. All right, we don't want to just break and then come back down. Then obviously it doesn't count. But if we break above it, we stay above it. That is a sign of the trend, kind of like turning from a bit of a sideways movement, like what we've seen over the past 1.5 years, to potentially moving up to a next higher phase, and maybe the uptrend continuing. It might consolidate above 85 to 95, a bit of profit taking. It might push up to $1, consolidate, and push higher again. Does it make sense? Right, so that's how we can see if the trend is indeed kind of like turning. And of course, looking at the moving averages, let me just remove this so that's a bit clearer. All right, so looking at the moving averages, you can see that this blue line and the red line, so these are the longer term moving averages. And since last year, May, March, this blue and red line, the 100 days moving average. Okay, let me just remove this. This blue line is the 200 days moving average. The red line is the 100 days moving average. You can see that both of these lines were pointing down a little bit, but eventually it got flat, right? It just moved sideways. You can see both of them are like sticking to each other, moving sideways. Look at this right here, just moving sideways over here. All right, and this just shows that we are in a sideways movement or consolidation. Right? So yeah, that's what was happening. All right, but right over now, you can see that this moving averages, right? The fact that we've gone above that 85 cents, you can see that there is some signs of the trend turning up in terms of the moving averages. You can see that this green line is a 20 days moving average. It's obviously sloping up right now. The red has started to slope up, blue line sloping up as well. So there are some signs of the trend just starting to take shape. And I feel that, yeah, all these moving averages can still continue to point up as long as we stay above that 85 cents level. So this 85 cents, as I mentioned, right, that would be the resistance we have broken up. So let me just go ahead to change it, the line to a new support level. So it will be green in color right now, like that would be a support level. So as long as we stay above this 85 cents, I think there could potentially be more upside as we head into the end of 2022 and even moving into 2023 and 2024 as the world continues to open up, people start to travel. That's where we will see a boost in revenue and profits for Genting Singapore. Alright, so this is Genting Singapore. I hope I've given you a quick idea of where we are for Genting Singapore, why I like it, alright, and perhaps you can put it in your watch list as well. Alright, so if you like this video, guys, I would appreciate you can give me a thumbs up or just hit the subscribe button, smash the subscribe button. That would definitely help out the channel. And thank you so much for doing it. Alright, and I hope you like this video. I will see you in the next video. Take care.